Alright traders, I'm back again with another video, and this is round 3. This is the third time trying to make this video. Hopefully it comes out this time and I don't have to keep doing this over. I want to get this information out to you guys, but anyway, this is going to be a little bit different than usual because now we are on the hourly time frame. We're not using the 4-hour time frame, we're using the hourly time frame, and I want you guys to see that this works on the hourly time frame on a smaller time frame. Okay, so basically I was in two trades, and you can see right now I'm in a trade right now, which is good for 47 pips right now. And I was in a prior trade on this same pair for 68 pips right here, as you can see. Now, basically, I'm trading the same way that Bill Williams does with his Profitability Chaos trading system. Well, I'm trading the exact same way, except I'm using the Ichimoku system instead of the alligator indicator. And there's a few other differences. I'm not using any indicators right now, but I will show you how to use the indicator that he uses. One of them, the awesome oscillator, or you can use the MACD, or you can use the Elliott wave oscillator. All going to be the same concept, and I'll show you that when we get into that. But I do trade the fractal levels like he trades, and I don't trade these magic bullets, but our magic bullets are the same thing as the Ichimoku system, letting us know that you got your TK crossover, your Chico span above price, your price is above the cloud, and your Kumo twist is bearish or bullish depending on which way you're going. Okay, now you can see this trade right now, 49 pips right here. I'm going to show you how I did this whole trade starting here. Now, when we're trading with the system, Bill Williams system, and using the Ichimoku system, one thing he uses that awesome oscillator, and a lot of times where traders get um, hurt and lose a lot of money is in the fourth wave of the Elliott wave. Now, I'm not a big Elliott wave guy. Don't use it for letting me know levels or anything. Basically, as far as getting into a trade, but the way that I do use it, I like to kind of know which wave I am getting into or maybe getting into. And if I'm into like the fourth wave or the second wave, sometimes can be a problem. I don't like to get into those waves. I like to try to stay out of those waves. So you don't have to be precise on your wave count. And when we get into using the awesome oscillator or the Elliott wave oscillator or the MACD, I'll show you how to count those waves. We'll be looking for a lot of divergence and how to count the waves. You don't have to be an Elliott wave uh, practitioner. Just have to know a little bit some of the rules, and we'll get into that as time goes on. But basically, we're doing the same thing as like I said, the Bill Williams Profitability trading system. Now we're trading these fractals, and here's how I got into this trade. Basically, you look for your signals from your Ichimoku system. So you got your TK crossover. We want to go long because we broke out of this cloud. You don't want to trade any fractals that are inside the cloud, and you don't want to trade any fractals below the cloud if you're going long. So everything has to be above the cloud if you're going long, and everything has to be below the cloud if you're going short. In this case, we're going long, so we don't trade fractals inside the cloud, but I did trade this fractal inside the cloud, and I'll show you why. Basically, I had all the signals. I had my Kumo twist, I had the TK crossover, I had price above the cloud, and I had Chico span above price past 26 periods ago. So I knew that the market was moving, starting to move. All right, so what I did, I put an entry order, and we're going to walk this through here. You use fractals for everything. You put your entry order in there, and then you have a fractal level right here where you put your stop loss. Now, if it's far, you can put it at the Tkinson. I mean, at the Kijinsen. Sometime the Kijinsen is going to be farther than the fractal level. Okay, so since we had that there, and also when you're taking a break like this, you don't want price to be too far away from the Kijinsen because you know that once it breaks the cloud, you're going to be due for a pullback. Here was a slight pullback, not a big pullback. But if this price went way up here and ran and you didn't get in, then you would know that you're going to get a pullback. Price is getting far away from the Kijinsen. It wants to get back in equilibrium, and that's what it's going to do, get back closer to the Kijinsen. But you're going to also see that momentum with the Kijinsen taking off on this angle like this. So you can see the slight momentum. All right, but what I did, I put my entry order above this fractal here. So you put it above the fractal indication, the fractal indication. Don't put it above the candle, put it a little bit above the fractal indication. So now what's going to happen? Price comes up, doesn't get me there, and I have my fractal level set for my stop loss. But then price breaks this level right here. It broke that level. It got me in on the trade right there, and you can see I'm in right there. You can see the line taking me up to the where I got out. Okay, so I followed this trade all the way to this level. Now, what you're going to do is once price moves up, now price came back, made these fractal levels here, then broke this fractal level. Once it breaks another fractal high, you can move up to the next fractal low that it made. So your stop loss will be there. All right, so then the price continues to go. Then it made these fractal levels, and then it broke this fractal level. So now you can move your stop loss up again. Move your stop loss up to here. All right, so now you're above where you can't you where your entry was. All right, so now you are not going to be a loser. But never let your winning trades become losing trades. Don't let a 50 pip profit become a loser ever. I mean, you're going to have to at least take 5 or 10 off of the table of that, but I would never let that become a loser. Do not let your winners become losers. So then price breaks this level, moves up, makes this fractal level. I move my stop loss up to that fractal level. And I just keep marching with the market like that. And I don't put a limit order where I want to take my profit. All right, so I could put an order here for a profit if I'm not going to be around. But if I'm going to be here, I'm going to watch this and watch when it moves up to that level. And I'm going to just keep moving my stop loss up. Now you see price going up. And now what I'll do now, I'm at this level. I can move my stop loss to the Tenkan-sen or put it a little bit above, below. Not the Tenkan-sen, but the Kijun-sen, right? And then once it makes another fractal level, if it doesn't come to the Kijun-sen, I'll move my stop loss up to there. So I'll show you what I'm talking about. So price is here right now. And being priced there, say price comes here, and we say okay. And then price goes here, takes off, and we say okay. But now price moved down, made a fractal level here. We move our stop loss up to here now, and we just monitor this trade. And now you can see this is the level where I'm looking for price to eventually hit this level and bounce and maybe drop, and then maybe attack it again later. But once price hits this level, I'm gonna monitor that trade. Now here's what I'm gonna be looking for. All right, so maybe price does this, and here's what I'll be looking for. Maybe price comes down here, and then maybe price hits that level. Maybe it breaks it a little bit. I'm not gonna get out of the trade if price does this, but I will move my stop loss all the way up to here, up to the fractal level that it made, because now price may come back and hold that support line, that resistance line. It's going to be support if it goes on the other side, but then if it doesn't, I'm already at the fractal level. I already made enough profit. So what price will do is this, and it'll fade me, and then I'll be out of the trade, and then price maybe come back down this way. All right, but I have my stop loss up here. And why do I have it up here instead of right here? Because now I'm close to the level where I want to get out of the market, and I'm looking for this level to get broken and continue moving. And if price can do that, then I'll be able to move my stop loss right below this level and keep it there, because it's going to honor this support level now. But see, if it doesn't do that, I'm already at the next fractal level where price tends to come to and then go back. So a lot of times price will come up and come back to this fractal level. The pullback will be to that level and then go, and then come back to this fractal level. So I move my stop loss to the higher level since I'm closer to the end of my trade just about. All right, so I hope you guys understand that. All right, so I got into that trade and I got out of I got out of this trade right here. The reason I got out of this trade was because I had 68 pip profit, and I wanted to, I saw the market kind of holding up here. I saw the flat line here with the Kijun, with the Tenkan-sen and the Kijun-sen. Your Kijun-sen really flattened out, so I knew the momentum was dying off on this trade here, and we were pretty good above the cloud. And I had said maybe this level here is holding us up, and here's where that level was, this flat top here, and if we would bounce on that level and drop down. but price broke that level. So what I did, I took my profit and I said, I know there's going to be a pullback here. So the pullback was to the Kijinsen, knowing that there was going to be a slight pullback. We already had fractal level set up here. So what I did, took my profit and then I put another order in right above that fractal level. And then when the candle came and broke that level, it got me back into the trade, and now I'm in for 49 pips, 48 pips. Now I let this come down to a certain level, at least to this Kijins, and I will not let this be a loser either. So I'm already two trades on the hourly time frame showing you guys, and I made over 100 pip profit on two trades. So yes, you can be very profitable with this system, just with this hourly time frame on, hourly, 4 hour, daily. But I like trading that 4 hour, but I'm showing you guys on the hourly. And now another thing, trends start on the lower time frame, so you can catch some bigger runs maybe, and you'll be able to catch those 4 hour time frame runs. A lot of times what happens is you get price coming down, and then let's say that this if this was Elliott wave and we were counting, and then maybe this would be one, and this would be two, and we're still in three. Okay, see, a lot of times what happens with the Ichimoku system, we catch that three, because what happens is you got one, two, and now three. Three breaks this cloud here, and if we get in on this level, we catch all of this major wave of three, if this is three. Now I'm going to show you how to count those with the Elliott wave um, oscillator, or the awesome oscillator, or the MACD indicator. Now I'm not a real great Elliott wave practitioner or counter, wave counter, and I'm trying to get better. But my main thing is I want to know where wave four is, because a lot of times that's where I notice I've been losing a lot of my trades is wave four, because a lot of times wave four is that sideways movement. And what happens with wave four is this: if this was three, if this was the end of three, sometimes wave four will range like this, and you'll get that sideways motion, and you'll get in and out, and it'll be knocking you out of trades, and you'll be looking to go long, and it'll spike up and then come all the way back down, spike up through your trade. And this is where traders lose out and start saying the system doesn't work, and then they start looking for something new, and nope, the other system doesn't work either, because certain different conditions of the market condition, your trading system is not going to work in every market condition. This is basically for a trending market. You can trade this in a range, but it's still, you got to catch the range and see it and know it. If you're in a four wave and it's more sideways, you're going to get eaten up in that wave, and you're going to lose all of your profit from this nice three that you just had. And if you lose that, then it becomes like the system is no good, and you want to look for something new. And this is how traders do: they look for something new because they figure that's not working, but you saw it work in the past, so why isn't it not working now? We have to figure that out. And so one thing I know is that wave four is really bad. Sometime two can be bad, wave two, but being that wave four is where we want to know where that is, I'm going to show you the way that we're going to catch up and know these certain waves, and know when we're um, in a run that we can profit from. So that's where I am now, traders. But you see right here where I told you I got in the second time, and I'm profitable for 49. So 68 the first time, 49 the second time, and we're hoping to get up to this level. We're looking for the market to get up to that level that I showed you right here, and then I'll probably take my profit and wait to see what it does. All right, so that's that on the New Zealand dollar yen 1 hour time frame. Euro US dollar, everybody's favorite pair, 1 hour time frame. Okay, traders, looking at this, this is how we would trade this, and this is how we do every time. We're below the cloud, so we made a fractal level below the cloud. We want to be going short. That's where our entry order would be put in. This is where our stop loss would be put in at that fractal level. And here's where our target's going to be. Our target's going to be right here. Now that's almost right now with that, that's not even one to one. This profit target isn't as deep as my stop loss, and we don't want to have orders like that. We want to make more than our than we're risking. So we want to risk less than what we're trying to make. But there is no more logical way to put this right now. And so I basically would come here, break this level. If we break that level, maybe we don't let it pull all the way back. So what we'll do here to make sure that our level is not as deep, we're not going to play the fractal as the stop loss. We're going to play the Kijinsen. That's the Ichimoku system's built-in stop loss. And now that'll put us more closer to 1 to 1 and even less. Okay, so you'll be like 43 pips or so profit for 55, but we'd like to break this level for sure too. All right, so you can be a trader that's less than 50% and still be profitable if you're more than a 1 to 1 ratio. If you were more like 2 to 1 most of the time on your trades, you can lose 2 trades, 3 trades, and still be profitable. So you can be 1 for 3 and be profitable. One out of 3 and still be a profitable trader or break even at least. But you got to be disciplined with your stop loss. You got to be disciplined with your system. When your system tells you to get out, you get out. When it tells you to enter, you enter. You can't play half of your system or not listen to every single signal of your system or say, maybe I can do it this time. This is how you start losing money. But now basically traders, again, there's your break, your fractal. We didn't play this fractal here in the break, and you can see where Chiku span is. It's inside the cloud. So we know that if we take this break here, Chiku span's inside the not the cloud, but the price realm right here. We want to get outside of that. Knowing that we put our entry order right here, we know that Chiku span will be below the price level, and we know that we already have the crossover, the TK crossover, and we have the Kumo twist. So you got your TK crossover, your Kumo twist. Chiku span will be below price, and price is below the cloud. So we break that level. We have all of our signals. All right. So we're playing the signal. We're playing the Ichimoku the way that the signals are telling us to play this. All right. So now if this doesn't ever go lower than that and it goes up, now we got to wait till price breaks and makes a fractal high. We're not going to play these fractals because price already came below this cloud. If price comes below the cloud then goes back up, you don't play the fractals, these fractals here. You wait for the new fractal to develop. These are old fractals. They're voided now. Now if price goes up and goes above this cloud, these fractals will be void. We'll wait for a new fractal level to be set. So price can come up, make price go up here, and then come back here, make a fractal level here and go up, bounce here and then go. We can play this fractal level higher now. So that makes our entry even better. All right, so that's Euro US dollar. I'm looking for this to break short, and then hopefully I can take this even longer than this level. All right, but this is a pretty strong level because you can see where price came down, hit it one time, fractal level, another fractal, another fractal. So it hit off there 3 times, then moved up, and now maybe it'll attempt to break it again. Third time, fourth time will be the charm. We'll see what happens. That's Euro US dollar. Pound Aussie on the hourly time frame. Now see, you don't take this fractal, it's inside the cloud, so it's right here. You would have looked here and said I'm taking that fractal, but you got a Kumo breakout and you're looking at this fractal. You don't take that level. So now you would be waiting for this level up here. And yeah, this was a good trade, but a lot of times you're not going to get this set up to be a good trade like that. This was a good trade based off all of our rules. We had everything set up on a breakout, not even playing the fractal, just playing that breakout right here. We could have played the breakout because we had your Kumo twist was bullish. You had your TK crossover, which was bullish, and Chiku span was above price, which was bullish. So you could have played that, and you could have just played the Kumo breakout and not even played the fractal level. But I'm going to play it safe. Now we moved up. We have a fractal level developed. So now if I want to get into this trade, I will get in just like this. I put my entry order here. All right. So my entry order will be there, and I'm going to put my stop loss here at the Kijinsen. The fractal level is deeper than the Kijinsen, so I want to put it at the fractal, at the Kijinsen. Now, you see this level developing here. This is going to be a support level. You can see where these candles are holding level right here. You can move your stop loss here, just below there. Now you have four levels of support and resistance on the Ichimoku system, and it's Tenkan-sen, Kijin-sen, and your two levels of your cloud, upper level and lower level. So now you're playing the Kijin-sen as the Tenkan-sen as support. All right, because you see this level here where the where the cloud, where the candles made a support level, minor support. That's minor support. All right, and then we would play this to go up to this level here. So all of our levels are set. Everything's known before we even enter a trade. We can look at everything and know where we want to be. All right, and this is better than 1 to 1 here. This is more like a better ratio. This would be profit of 2 to 1. Now we can put our stop loss down here. That'll make it more 1 to 1, but we can keep it right here at the Tinkinson and give us a better level. All right, so price breaks that level. We look here and then we see what price does once it reaches that main support level. That's going to be there. See what price happens right after that. All right, that's pound Aussie. Euro New Zealand dollar. I already have this boxed in. Here's where I told you a lot of traders look at this mess right here. This is where you would get um, eaten up with your profit, and you have to see that all this. It's hard to see this while it's happening, and you just really don't know. Price coming down here, but see if you play the system the way that I'm telling you, you would have lose here. We got an entry in here. We would have an entry here. This entry would be no good. This entry would be really no good. You're getting beat up in this kind of a market, and this is where the trader would start saying, "Oh, this doesn't work." But look at the market. Look at the price action. It's terrible. It's sideways, moving downwards a little bit in a sideways motion. This is where we don't want to be trading. We'd have to find out if this was a fourth wave. We definitely don't want to be in that. But we just wait for better price action for a market that's getting to a trend. And you can see where you had all these crosses, all these crosses. Look at all those crosses. That's telling you that this is not good price action. You know, when your Tenkan-sen and Kijin-sen are crossing like this constantly, that's not a good thing. So we take this up to the 4 hour time frame. Let's see what it looks like with that price action. And you could see it's still the same thing, not too much going on. You would have got taken out here if you got into that trade. Then you would have set this up for that and you wouldn't have made that. But you wouldn't have taken any of these long ones, these short ones, because we're above the cloud. So now your next level would have been here and it never reached that level. So now you're here. Okay, but we can't take this trade here. We wouldn't have been able to take this trade now, even if it happens. Why? Because Tenkan-sen is below Kijin-sen, and that's bearish. Price is, I mean, Chiku span is well below price. We can't take this trade. We wouldn't even look at that, so this wouldn't be a trade for us to get into. So back to the hourly time frame. So looking at this hourly time frame, the only thing I would do is, like I said, this would be where I would put an entry order. But looking at this market, I wouldn't even mess with this pair. I would wait to see it start doing more of a price action that is tradable. Looking back, you can see this Euro New Zealand dollar is a pair that's nasty. Let's go to Euro Aussie. I look like I already have this set up because this is where it is. You don't take anything below the cloud. These are void now because price made new fractal levels above the cloud. So now you have to wait for a new fractal level to develop. But being that you see all this fractal level area here, this is going to be strong support level. So I mean, you can play that level if price came back down there. But you really want to wait for price to make a new fractal level and then break that new fractal level. You want to play the most immediate fractal level. So now going on this, we would have started out when price came up here, made this fractal level, we would have started out here. This is where we would have been. Then price would have moved down, made this fractal level. So we can move our entry order down. And then it came and made this fractal level. We can move it right on here. So now this is where our entry is. Okay. This is where we're going to enter the market. This is where our stop loss is. And look at where our profit target is. And the thing is, getting in on this trade here, you got to make sure you have all your signals. You got your TK crossover, you got your Kumo twist, which is bullish, bullish crossover, equal span above price, that's bullish, and of course, price above the cloud. Now, Bill Williams has five magic bullets, and these are our magic bullets. The same thing that the Ichimoku system tells us. US dollar yen, this is nasty here again. Look at this. You would have got really beaten up right here. You can see it. But now you see this low candle, then you have price move up. You would have started out here. So let's see how that plays out. Because this is not a really good trade, and opportunity is back here. This is where you would have lost some money. So if you had your entry order here because price is down here, and look at this right here, even back here. If you had entered here, price would have pierced you right here, then came all the way back up to take you out because you're above this stop loss right here. Your stop loss would have been right here because here goes the fractal. So price would have came down, made a fractal level. You would have put your entry order in here, and price would have back retraced and then went down, made a little retracement, and then price would have came all the way down, got you in the trade on one candle, and in that same hour ticking you out of the trade, and you would have lost all that right there. Now that's a loser there. But then eventually price comes back and goes down after it took you out, and then it comes down, and now it goes here. Now here's where you're losing again, and here's where you're getting frustrated and you're saying this isn't working, this doesn't work. Price comes down, goes up, comes down, never breaks your fractal level, makes a new level, you move that up. So now you could come down, it makes a new level, so you can move up. Still doesn't get you in the trade. Down, you can make a new level. You never got entered in here, so you wouldn't have lost anything playing this level, and you never had an entry. It never got triggered, and then price moved up here. Now price moved up, made a fractal level, right? So now here's that fractal level. We wait for price to break that, so it goes down, makes a new fractal level. We move it down. We can get in earlier now. And look where our stop loss is right there. Price doesn't break that level, but it makes a new fractal level. We can get in here. But then price goes below the cloud. This fractal is void. We don't want to be in we take our entry order out. Now price moves up after it made this fractal level, so now we're looking to go short again. Stop our entry orders here, and our stop loss will be at the Kijinsen because there is no closer fractal. So price comes down, we're looking for it to come back down, never comes down. So then it makes a new fractal level, we can get in here. You may have gotten entered in here with this candle, and what happens, it takes you out, you lose again. Then here it is right here. You definitely hit here and you're out, and the market is moving up. And you can see signs of the market moving up. It made this fractal level here and never broke it, but it made a new fractal and then broke it. Okay, so now you don't trade anymore short trades. Wait to see what this market's going to do. Let it give you something definite. And here's where it became definite right here. Boom, it ran, retraced. Now you can say this is where you want to get in. And then here's where you're going to put your stop loss. And now look what the market's doing. It may come back and hold this level. Now we didn't get in this trade, but you see it broke. Now it may retrace and hold this level and then go again. And you can see where our target is. This is how you play this system. The pound dollar, nasty, nasty, nasty looking price action here right now. Not even gonna mess with that. And finally, we'll go over this Aussie dollar. This doesn't look too nice either. These kind of this stuff here is what hurts traders, and this is where you lose money. And this is where you have to be disciplined. And you don't have to lose money because basically, if you follow the Ichimoku system and the rules, it'll keep you out of some of this mess because trying to take some of these trades, you see where Chiku span is. Chiku span's all inside of the price realm. So you wouldn't be able to take some of these trades. Going short right here, this won't work because look where Chiku span is. So that will keep you from taking this loser right here. This is a definite loser. If price comes down here, Chiku span is way up here. We need Chiku span to be below this price in order for that to work. And then, you know, breaking this level here, we never would have taken this trade, right? If you're not listening to me, you would. But look where Chiku span is. He's above price. He's keeping us out of this disaster area. And the same thing here. Chiku span will keep you out of this most of the time. Now it breaks here, and you do get a little run, so you could make a little profit. And here's where I told you about this area here. Now here's where you could get stuck. Chico span is below price here, and we're looking to break this level, and we say we're below price. But then price never breaks below this level, so we didn't get hurt there, right? But now if we want to go long, Chico span's above price, so we never get into this stuff here because Chico span is keeping us out of there. Chico span is keeping us safe from making a bad entry on any of this stuff. Okay, even if we took this one here, this is inside the cloud. Then we have this one here. Now Chico span wouldn't have saved us on this one. You can see we would have taken that break. Chico span is below the price. And that would have looked like a good trade, but that wouldn't have been a good trade. Let's see if we had all of our signals on that. Yeah, we had our twist, we had our Kumo twist, so we would have had all of our signals. Everything was bearish, but that trade didn't work out. That wouldn't have worked out. Now that's one that you would have Chico span couldn't have helped you. But like I said, you're not going to win all your trades. You want to make it so that if you lose trades, you're not losing as much as you're making. So if I lose two trades and I win one, maybe I break even, okay? But if I win two trades and lose two trades, hopefully I'm more profitable on 50% than I am, you know, if I lose two trades, hopefully I'm profitable because I'm keeping my stop losses tight and I'm making more than I'm losing. But that's it, traders. I'm done with this. I'll be back with another video soon, and we're going to go over some other things using indicators with this system. But you don't really even need to. You just need to do the things that I just showed you. Pay attention to Chiku span, pay attention to all your signals, and then that's it. But we're going to come back with some other indicators that are going to show us, help us to count the Elliott wave, help us to see some more momentum, and that's going to be it. Remember, I'm not an Elliott wave tactician or a practitioner or whatever you want to call it, but I do know how to count some waves, and I do know how to count it based off of the Bill Williams system, and I'm going to show you that, and that's how we're going to learn to watch out for that wave 4 that we want to stay out of. All right, traders, hopefully I'm helping you guys. Uh, that's it for me for right now, but I will be back. Hopefully this is helping you, and until next time, God bless.